In case you were unaware, Nvidia will be announcing its profits after the bell today. According to a recent note from our next guest, the company's journey to a $4 trillion market valuation starts today with, quote, yet another outstanding performance. Additionally, he believes that tech equities will keep rising through the end of the year. He's Dan Ives, Global Head of Technology Research at Wedbush Securities. In case you didn't know, with a $200 price target, he has a buy rating on Nvidia. Why will this quarter be a drop the mic? I believe that the current ratio of supply to demand is 15 to 1. They are the only game in town, as you are aware. This AI revolution is only getting started, based on all of our trips to Asia that we have discussed on the show. As all the hyperscalers begin to build out that AI capital expenditure, I believe the street is still underestimating what this will do, as you can see with Blackwell. Jensen Huang, the godfather of AI, is at the summit of that mountain. It's going to be a get the popcorn out, drop the mic kind of quarter tonight, I believe. Will the reported figures be the source, or will the comments surrounding the guidelines also play a role? Well, guidance in particular, I believe. Because if you look at Blackwell, we might be looking at a $253 billion annual trend, right? And the street has kind of modeled this, if you look. In my opinion, the extent to which this will develop over the course of the next year or two is still greatly underestimated. The key question, in my opinion, is when this could reach $200 billion in revenue annually. I believe that they are still underestimating the impact that Nvidia and this AI expenditure tsunami will have, both for Nvidia and for large tech in general. Because of this, everyone pays attention when Jensen talks. However, it only illustrates what's to come. As soon as you figure this out, we can sort of predict how much each of the major customers, the hyperscalers, will spend. They have provided us with their own commentary. How come this is a mystery? Because I believe that a lot of people are still concerned, whether it's overordering, Blackwell delays, or technological concerns. The 2 and 2 model is at issue here. $2 billion exceeded the guidance by $2 billion. When you project this, it gradually turns into a business. Initially, you're discussing dollar earnings, but suddenly you're wondering whether it could be $5 or $6 out-year earnings. However, it also demonstrates that the AI party, which I believe lasts until 4 o'clock a.m., still has broader tech at 9:30 to 10 p.m., and for that reason, I believe that big tech is really optimistic about the tech trade. Look, we're talking about the NASDAQ not only hitting 20,000 in the coming years, especially with the deregulation under Trump. You're talking about the $2 billion average sales beat over the previous few quarters. It may not be as much this time, according to some. Would the price be penalized if it occurred? In terms of the model, I still think it's possible, but not by much. But it's also about Blackwell and what that can entail in the upcoming quarters. And that just goes back to 3 months ago. The first response was that the stock fell and bears with their spreadsheets came out of hibernation. The increase since the watch party is 177%. As this fourth industrial revolution unfolds, I believe that, in addition to Nvidia, Apple, and others, we will eventually be discussing $5 trillion in tech market capitalizations over the course of the next 12 to 18 months. You said that there isn't even a close rival. In 2025, does that dynamic change? Look, AMD is clearly attempting to get around the corner, in my opinion. Others will eventually start to show up. There are private businesses involved, and a lot of money will be spent in an effort to determine who might win this race in the end. While everyone else is traveling at 35 miles per hour in a minivan, Nvidia is still in the left lane in a Bugatti traveling at 90 miles per hour. Because of this, the stock doesn't seem pricey to me. I still believe that the street undervalues its potential and the potential for growth. For this reason, I believe that tonight will provide yet another clue as to the direction of this AI spending trend. Of course, we'll be watching. The Bell is the world's largest market cap firm. Thank you, Dan. Yes, thank you. Let's talk to you about Nvidia, Dan. You discussed limitations today and the significance of that phrase for Nvidia. Constraints are fantastic since they indicate that there will be more in the future. Additionally, Nvidia is the sole company in the market. The software won't work. Thus, you can't just plug in an AMD CPU, etc. Therefore, all you can do is wait for them to ship it to you. That's why we enjoy it. This indicates that the stock is being purchased during drops. It didn't stay down long, as you can see. Now, it's most likely flat or slightly down. As the year progresses into the second half, that propels both sequential growth and margin improvement. Additionally, keep in mind that they are the only semis business that has not commented on Q1. In this market, that is a significant differentiation. Therefore, I believe that many people will purchase it when it drops. How did you feel about his resistance to scaling walls, as it were? We blogged about that earlier in the week as well, and we believe we'll just resolve it. I was quite impressed. In a podcast, Anthropic's Dario Amodei discussed the trend of synthetic data and how robots will generate data before creating it from scratch. That will keep these machines running and help feed them. In my experience, and I'm not an expert in artificial intelligence, the industry will usually figure this out on its own. So you're not worried. No, because I want our viewers to understand that the issue we brought up a few weeks ago, that you're not receiving nearly as much productivity boosts from the newest models as you did from the previous model, was sort of at the forefront. You don't purchase that. The brightest minds in the planet are working on this issue, and I have no doubt that they will figure it out. They're navigating the situation. A few months ago, there were additional obstacles. These are incredibly intelligent people figuring stuff out. However, I believe that the good news is that data is the new oil and gold and is truly taking off. These folks are figuring out how to input the data that we are producing, whether synthetic, AI-generated, or from scratch, into models. Additionally, Elon Musk is transforming self-driving technology by taking an increasing amount of video. Jim spoke extensively about video, and I believe they've made significant progress in that area. However, it has only just taken hold. According to Jensen during the conference call, the data center is the new industrial base for artificial intelligence, so to speak. I believe we'll figure this out. Let's return to Nvidia based solely on your forecasts. What are your expectations for the upcoming year's sales and growth rate? I'd want to know why you have your price goal set at this level. I estimate that my revenues will grow by 50%, which is conservative, and then by 22% the following year. Who knows? Given Jensen's history, that 22% seems like a relatively low percentage. Our goal is merely 35 times our projection for 27, which is actually calendar 26. For this stock, it is a PE to growth that is still quite appealing at the moment. Naturally, the stock may decline on any given day. However, I believe that this is for the enterprise given the firm's expansion and the fact that it is a systems company similar to what Apple is for the consumer. It will be larger than people currently believe, generate more profits as a percentage of the overall industry, and endure longer. Based only on my personal experience, vertically integrated businesses that do everything well typically succeed and endure longer than most people realize. When you discuss your revenue predictions at 50% and 22%, as well as how Nvidia executives are cautiously navigating this process, I find it interesting. Speaking of growth, you probably won't be able to maintain enthusiasm for 50% of the time. Are they able to walk this carefully? The fact that this is also a financial gusher is what must happen at some point. We're a growth company is what Nvidia wants to say. However, they eventually have to repurchase additional shares since they are unable to do anything with it. Naturally, the government is unlikely to allow them to purchase anything near $1 trillion. They will therefore need to make tuck-in acquisitions and return stock. Like Apple, I believe they will undergo that transformation into a more mature company that says, hey, we have more recurring revenue. I believe they are aware of this, which is why they are developing a software company and will do so in the future. However, they are currently in growth mode.